Well, thanks, Gorm. It's a pleasure to join you today to run through the Silvercorp story with you. I think you'll find that Silvercorp's a very unique story in the silver space, and we like to think of it as really a profitable silver producer that's positioned to grow. I'll just draw attention to the fact that in this presentation, I'll be making some forward-looking statements. Now, I'd like to start off with this slide in particular because it really shows a good snapshot of the contributors to our asset value and allows me to speak a little bit to what the strategy is behind each of them. So first and foremost, the easiest thing to assess is we currently have a cash balance of $210 million. That was as of December. We have no debt. Company hasn't done a financing since 2010. We pay a dividend, 2.5 cents US per share per year, paid semi-annually. And you can see from our corporate history, giving shareholder return has been a focus with over 175 million payback to shareholders through dividends and buybacks. But the real strategy here for this cash is to use this as fuel for growth. We're looking at assets that we can acquire, build, and develop into the kind of cash flow machine that we've done with our assets in China. Now, the second asset in this value stack is this investment portfolio. That's the blue bar that you can see here in this cylinder. And as of December, which wasn't really the best time to be valuing mining stocks, that had a value of 122 million. New Pacific, our 28% stake in New Pacific, another public company with assets in Bolivia, is the largest investment. It's actually currently worth 110 million. And just important to note, we've made 3 times our money on that investment when we've invested in it. Now, the strategy with respect to this blue bar is to look at other interesting opportunities to expose our shareholders to growth in good assets, and that takes the form of both investments, more passive, smaller, but also incubation, which is what New Pacific would fall into that category. Now, when we turn to the last bar here at the bottom, basically the base of the company, the red segment, these are the mining assets. And if you take a look at our recent market cap, this has actually gone up. I think we're over 521 million right now. But if you take a look at this this math equation, and you take the market cap and you back out the cash and you back out this value of investments, it looks at what really the market is paying for these mining assets, which is up a bit from this 190 million from when this slide was done, but is still vastly below the analyst consensus NAV of 575 for the company, for the mining assets. Now, these mining assets are really the only engine that's delivered this 4-quarter trailing operating cash flow of just over 90 million. And they have a very low all-in sustaining cost to produce an ounce of silver, both through time and recently. In our December quarter, this cost was $9.28 an ounce of silver production. Now, what we've got underway is a program to optimize these mines, looking at some growth down the road. And so we can see growing from 6.6 million ounces of silver in this current fiscal year, ending in a few days here, to targeting 8 million ounces of silver by fiscal 2026. Now, also important to note that, for these mines, we wouldn't have been able to do what we did if we didn't have a 17-year track record of good ESG and government relations with the various levels of government where we operate in the communities. And we'll touch on that a bit later in this presentation. So where are we? Well, we're located with 2 mining segments in China. So the flagship is the Ying mining district, and that's in Henan province, comprises 7 mines that operate individually and feed into 2 centralized mills. And as well, we have the GC mine in the south of the country in Guangdong province. All of these mines produce the same product, which is a lead concentrate containing the silver and a zinc concentrate. And altogether, our production since we began operations in April of 2006 has been almost 90 million ounces of silver, over 1 billion pounds of lead and zinc. Ying alone has distributed profits to shareholders in excess of 500 million US. And we're in a very healthy situation from a reserve life. We have in excess of a 15-year mine life on a blended basis between our operations. Now, where we operate, we think it has a number of advantages. So we're close to our customers. Now, these are the smelters that many of the mining companies deal with in terms of for treating the concentrates they produce. And so all of our production is sold domestically to smelters, and we get paid the contained value for the metals in those concentrates. We're also close to the suppliers that provide the supplies and services that basically all the mining companies around the world use. So being near to this supply means lower working capital, getting the best pricing for those inputs necessary for mining. We have a capable and disciplined workforce, and really the regulations that have been in place to allow us to mine and operate have been stable since we began production. And we really have quite the freedom in terms of who we sell our product to, and also to distribute profits back to our head office in North America. And I just draw the attention to the fact that, operating in China, we're not alone as far as Western companies. There's many other Western companies that have manufacturing capacity in China. And you can see the statistic, foreign direct investment in China surged to $189 billion, up 10% in 2022 versus 2021. So really, it all comes down to asset quality. And so if you look at that bottom left-hand chart, you can see our most recent all-in sustaining cost that I referred to, $928 US per ounce net of byproducts. But really, over the years, that has been the lowest cost and the most stable performer relative to our silver peer group. And that's what's delivered those high margins. We've got an EBITDA margin of 41% in the most recent quarter, again, higher than and has been more stable than our peer group over the years. Working your way down the income statement, looking at our return on equity, you can see 8.5% the most recent quarter. And again, if you think back to that first slide that I showed you, which showed the cash as well as the investment portfolio, neither of those two elements in the story are contributing to this return on equity calculation. So if you back them out, our return on equity would be more than double what it is right now. Now, the asset quality is what's delivered that consistent financial performance. So you can see on a quarterly basis over the past 8 years, very consistent and stable adjusted net income. And similarly, on a free cash flow basis, we're a strong cash flow producer. And the one element of seasonality that you can see in that chart there is in calendar Q1 is Chinese New Year. So our mines are shut for a 2-week period, which obviously has an impact on the results for that period. Now, just taking a quick look in terms of our metal split, you can see where it's tracked. Most recent quarter, silver was 54% of our net realized revenues. Base metals was 43%, so that's the lead and zinc. And you can see gold was a small contributor at 3%, which we anticipate will grow here as we go forward. Now, looking also from a valuation standpoint, these charts show that relative to our peer group, we're trading at the left end of the spectrum on both an EV to reserves, EV to EBITDA, price to earnings, and price to cash flow. And again, other than the EV correction for cash, none of these figures also factor in that investment portfolio, which is another contributor to value, which doesn't show up in these metrics. So let's drill down a little bit into Ying. So Ying is that the majority producer of our silver and lead and zinc production. You can see Ying comprises 4 mining permits. You can see those red blocks at the bottom of this map. Now, we drilled approximately 1 million meters of core in 3 calendar years. And this aggressive pace of drilling is expected to continue, targeting another 270,000 meters in fiscal 2024, which will begin here in a couple days. And this began looking at some new discoveries of some gold veins, which are right within our resource area. But that program expanded out to looking at our traditional mineralization as well. And it's what's allowed us to, in our last technical report, replace the reserves that we'd mined in 2 years, and also identify a number of new targets for reserve and resource growth on the property. We're underway on a mine optimization program. So this is changing our mine planning with this additional drilling results, and also looking at different mining methods, and also bringing in some new technology like an ore sorting machine, which we think can assist with some of the economics and improving the grades of the material that we're actually delivering to the mill. We've started on an expansion program, which right now initially is focused on a new tailings storage facility to ensure the long-term future of the mines, but we'll then move into a mill expansion program where we'll build another mill, a 3,000 ton per day mill at the milling complex, and then decommission our oldest mill that we've been operating with since the beginning. Now, part of this growth strategy includes looking at some consolidation targets in the vicinity. A few years back, we acquired the Quan Ping project to the north. It's got some known silver and gold vein structures, as well as some silver, lead, zinc. We've got a mining permit as of late last year, and the current program is to get some ancillary permits associated with the mine safety, the environmental plan, as well as build a mine plan and a mine team, with the objective of developing this mine as a satellite operation and trucking the ore down to the Ying milling facility. Now, a lot of this has been made possible because of this drilling program that I mentioned. You can see the big ramp up that began in 2020 in terms of drilling. But, Ying really has had over 2.2 million meters of drilling since inception. GC, obviously a smaller mine, but also very healthy drill program there. And this has really been focused on making those new discoveries, increasing our near-term production forecasts, replacing the reserves, and also really augmenting and optimizing the mine to be able to deliver ore from shallower areas within the mine, areas where we already have development. So talking about production, this chart shows our history in terms of production growth. Very modest beginnings, under 2 million ounces when Ying began, to now where in the last 7 years we've been tracking between 6 and 6.5 million ounces. You can see that coming up in this planned fiscal 2024, bumping that with our midpoint of our guidance, looking at 7.3 million ounces. I'll note that that number includes a bit of a gold equivalent converted to silver, as we do anticipate a bit of an uptick in the gold production from Ying in particular. The red box is the GC mine, began production in 2014, a smaller but stable contributor to our silver production profile. Now, we talked about the growth in silver production. Well, this is taking a look at the reserves and resource base. From the beginning, there was actually not reserves, but from all the drilling that's been done, built up a healthy reserve base, which now exceeds 15 years. And, with cumulative production of 90 million ounces, we still have a very healthy future ahead of us in terms of reserves. And I note that those reserves are included in the 210 of M&I, but the resources, the inferred of 150 is on top of that. And we anticipate with that additional drilling, we're going to continue identifying new resources and moving them up into the reserve category. Now, I'll touch briefly on New Pacific Metals, the largest of our investments in the mining investment portfolio. So why invest in New Pacific? Well, the original reason was the Silver Sand project, identified as being a very high potential silver project. That turned out to be true with a discovery and delineation in two resource estimates. The most recent that was announced just late last year of 200 million ounces of silver. In January, the PEA was announced, which speaks to a 14-year open pit milling operation producing 171 million ounces of silver. with a very attractive starter pit and first 4 years of production exceeding 15 million ounces of silver per year. After-tax payback is less than 2 years, and you can see the statistics here in terms of the NPV for the project, 726 million and a 39% IRR, very healthy economics. Now, the company has followed this up with 2 additional projects. The least advanced is the Silver Site project, which we won't spend a lot of time on, but Carangas has proven to be a very high potential silver, but also gold deposit with a broad zone of silver mineralization ranging from about 1,000 meters by 800 meters across. And below that, drilling has delivered some spectacular intercepts, 500 to 600 meters of 1 gram to 1.25 grams of gold on top of that. The plan here at Carangas is to finish up this first quarter drilling campaign and go into delivering a resource estimate by mid-year and following up that with a PEA by the end of the year, while continuing to advance the Silver Sand project through permitting. Now, this slide really speaks to the fact that, from a company, we've had a corporate philosophy over the long term of doing the right things. That's, with in terms of environment, safety, the community, our employees, and what we've been really embarking upon in the last couple of years is a program to be better communicators of those programs that we have. Highlights from our last sustainability report, again, a excellent health and safety performance, getting those international certifications. Again, on the environment side, zero material incidents, again, certification. And I'll highlight that all of our mines are green mines, as been determined by a government program in China that looks at every mine on a classification scale of 80 criteria to determine whether or not you're doing things right. From a social standpoint, we've had no issues both internally with our people and externally with the community. We're big investors in the community as well, infrastructure programs. And I'd say last but not least, in terms of that outbound communication effort, the board has formed a sustainability committee as well as a management center for ESG in Beijing, and really looking at aligning our internal programs with the external review and classification that many of the organizations are looking at. On this slide, just looking at our current shareholder base, you can see on the left-hand side our top 10 institutional investors with a mix of some of the ETFs that everyone's familiar with, as well as some traditional long investors in North America as well as in Europe. And from an analyst coverage standpoint, we have 7 firms that are covering us in both spread across Canada and the US. Just to sort of recap in terms of catalysts for the company coming up here, we're anticipating increased production in fiscal 2024, doing additional drilling, in particular at Ying, which will add to the reserve and resource base, but also potential to make new discoveries. We're running through those mine optimization programs at Ying and as well at GC to tweak and improve the economics going forward. We expect to have some news later this year on that Quanping satellite target and bringing that forward into a mining operation. We are building a new mill and tailing storage facility at Ying, which will bring our milling capacity to 5,000 tons per day when it's complete. Didn't really spend a lot of time on BYP, but that's a mine that we have on care and maintenance, which has a gold resource identified and looking to get the permit to bring that back on as a gold operation. And of course, New Pacific, which I just spoke to, has many project catalysts that we expect will add value to our stake there. And as always, we remain on the hunt for new projects, and so looking for potential acquisitions.